The sterling versus US dollar is the biggest mover today to end the trading week. It's up over 1.0%. We did have a better than expected flash and services manufacturing PMI indices for the UK. That helped to propel the pair higher and break through some key technical levels. I'll talk about them as it relates to not only this week, but next week's trading. So let's get started. Looking at the hourly chart, what we saw in trading here today was a break above this swing area through here. The swing area is defined by some swing lows right through here that forced the price to the upside. We came back down and through that level and then used this area as resistance before moving to the downside. We returned back to that area right through here and here and here during these trading days this week, and including in yesterday's trade where the price high came right up to that level once again and rotated modestly to the downside into the close. In trading in the Asian session today, the price moved higher. And what do we do on the dip right here? Found support against the high of the swing area, and that gave the buyers a go-ahead to push to the upside. What is also near this swing area is the 38.2% retracement. That's of the move down from this high right here in December to the low price that we saw in January. Getting above that 38.2% retracement is always something good for the counter trend moves. It shows that the buyers mean business, and that was another key aspect of the move to the upside in trading here today. Now, how have we gone since then? Well, we came up to another swing area right through here. This other swing area is defined by, again, swings lows through here before push the price higher. Then we came back down, tested the level, moved back higher, came back down, tested the level, moved higher, came back down, tested the level, moved higher here. But this time we found willing sellers against the 100 and 200-hour moving average. That gave the go-ahead to push to the downside. And we moved to the underside of that level, only to rebound back to the upside and try to hold support here until we found resistance against the 100-bar moving average, against the 200-hour moving average here, and finally breaking up below the level here and below the 100. So it's been since this point right here, which is at the beginning of January, where the price, since the price last traded in this area. And in trading here today, we moved into that area and found resistance sellers against the top side of that swing area. Also near that high is this parallel channel trend line, which happened to stall the rise as well, right near the high of the swing area, near the high of that parallel trend line. So what does that say about next week's trading? Well, there are a number of things that happened today that give the buyers some more confidence. We moved above the 38.2% retracement. We also moved above the 50% retracement here at 1.24532. That might be a close risk level. Getting above the 50% retracement is always another milestone that you like to see, and especially coming on the break of the 38.2% retracement on the same day. The 200-bar moving average on the 4-hour chart in this swing area is another support area that if the price were to hold above that level and base and move higher, that would be good news. On the top side, we need to get above this top side trend line and then the 61.8% retracement to open the upside for potentially a test of this area right through here, another swing area where we had a floor right there and then became a ceiling right here, 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 and here, and here before moving to the downside. So that area up here between 1.2596 and 1.26147 is another key target on the top side. What would hurt the bias, of course, is a move below the 50% retracement. That might give sellers some cause for pause, especially since we came up to that level right here, found willing sellers, moved above it. So the break, those buyers up here looking for more momentum may start to give up and see more sellers that would correct the price further to the downside. So be aware of that level. Now let's take a look at the daily chart to see where we stand in regard to it. And you can see that the move to the upside in trading this week also was able to get above a key swing area, floor and ceiling area, going back to this period right through here where we initially created a floor before moving to the upside. We came down to the floor, fell through that level, and it became a modest ceiling through here before trading above and below it during this period, and finally moving to the upside through here. The price low that we saw in last year, it looks like about April or May, came down to the area as well before moving to the high price that we saw toward the end of 2000 or the last part of 2024. And then we rotated to the downside, came down to it, and broke below that level in the month of December. In January, we've seen the price move back above the swing area here between 1.2298 and 1.2335. That's going to be a key level on the top side as well in trading going forward. As long as the price can remain above this level, the bias remains more to the upside for this pair. On the top side, the 38.2% retracement of this must move to the downside. The 2024 high to the low comes in at 1.2606. Be aware of that level on more upside momentum. So there you go. A detailed look at the sterling versus US dollar for you traders to gauge your trading. Be aware, be prepared for next week's trading. My name is Greg McCloskey. Good fortune with your trading.